We love trading down days, and let me tell you why. Today, my name's Rob, and I've traded 1,500 straight days with my wife, Maria. She's upstairs trading right now, but I wanted to come down and do this video to show you why we love down days and how you can make money on down days. We've done a lot of videos. If you don't know, I'm a former attorney and professional gambler, and Maria is a former banker. Like I said, we've been trading every day for the last 1,500 days, and we've been trading SPX trades since it was July of 2020. So at any rate, today we're not talking about SPX. Today we're going to be trading futures, but you can use it for any type of thing. I'm going to be showing you the NQs. You can do the MQs if you don't have quite the size account with a bit smaller account. So let's get right into it. Today is November 7th. It's 9:15 in the morning. So we got a market opening here in a few minutes. So what you can see here is that, let me get this, okay. So we've got a down market here. Let's move this over. This is our day chart, and I'll shrink this up a little bit so you can see the days. And you can see finally we're getting a down move in this market. It's been nothing but up, 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 up. What we're going to do is very simple, is we're going to sell naked puts in the Qs. Those are going to cost about $12,000 in buying power. We're going to sell them for $3,000 or $4,000, and we're going to buy them back for 25% less. So if we sell them for $4,000, we'll buy them back for $3,000, and we'll make $1,000. That's going to take on average 12 days. It's pretty good money. I've been doing this since we started on February 20th of 2020, and it's our longest strategy, and it's been extremely profitable for us. I put those on 45 to 60 days out. I put them on at 12 delta, and I close them at 25% profit. Now Maria has better results than me, but she's more aggressive than me. And so what Maria does is she puts it on a shorter time period, so less than 45 days. She's more aggressive on the deltas, more like 18, sometimes even 20. And she waits for it to profitability to get more towards 50%, more along the Tasty Trade type of rules, although Tasty Trade says 45 to 60 days, and she likes it much shorter. It requires Maria to do a little more management than it does with me. She will put on hedges against it when it's moving violently to the downside if we have a black swan, and she will roll them down and out. But I'm going to show you both strategies very quickly so that you have an opportunity on this down day to make some money, because the stock market's funny. It's the only time when things go on sale that people get upset. Panic, panic, panic. No, things are on sale. If I told you that everything at Walmart was 20% off today, you'd be thrilled. You'd be zooming down to Walmart to get all your goodies. Likewise, when I tell you the market's down 20% or down 10%, we should be running into the market and buying all the goodies. And that is why we always tell you, keep your buying power low. We never, ever, ever use more than 33% buying power. Why is that? Because of today, these down days. This is where the money is made. This is so easy, guys. This is such easy stuff. I've been doing this strategy over and over. I love it. I just wanted to show you what we're going to be doing. All right, so quickly, let's take a look at the minute chart and see where we are here today. Oh, rats. Are we coming back up? That's bad. I know, it's so funny. People are always panicking and telling me, oh, Rob, the market's down. Oh, here we go. Great. Great. All right, so I was looking for this 25,000 level. You can see we haven't been down there for a while. Looks like we're headed in that direction. What is this one at? This is that. We're at the, let me bring this in just a smidge so we can all see it together. So we're at 25,088. If we can get down to this $25,000 level, I'm going to start selling some more puts. I was hoping last night we would get there, but we just didn't get down that far, and we haven't been down there for quite a while. So that's going to be a great opportunity. So how do you actually execute this trade? Let's take a look at the Tasty Trade platform. So here we are in the Tasty Trade platform. You notice I'm looking at the Qs here. I'm looking at the Z5 contract, but it doesn't matter. When you bring up Tasty, it shows you all the contracts. So here it swaps over to the H5 contract. So if Maria was doing this a little more aggressive, we don't like doing the weeklies, so she would probably be going out, and she'll probably be going in today at 21 days, and she's just going to go look for the delta over here. She's going to go for 18 delta, and again, you try and look for where you've got the most activity and the smallest spread. she might go in for the 750s here instead, or she might go in for the 500s. Probably the 500s is where she'd be going. And she's going to try and sell probably at the market open. If it goes down, she'll wait a bit. But she normally goes a little bit higher. So if it's saying that the ask is at 160, she might put it in at 180 and wait for the market to come to her. So that's what Maria's going to do when she's opening positions on down days. On down days like this, for me, I'm going to look for the I don't like the weeklies. I'm going to look for the end of month here, 45 to 60 days, so that's 54 days. Look how easy this is. It's literally 5 minutes a day. And I've been doing this for years. It's my most profitable trade by sure. I like on the 50s or the 250s, so I'd be doing it right here, which is perfect 12 delta. Excuse me. I'll probably put in a sell order for, I don't know, 200 or maybe 210, see if I can get that. And then if the market starts going down, so let's say the market starts going down, so I'll sell my first one at 210. What I do is I want you to take your buying power. I want you to use one, if you're using 1/3, what I do is I take my buying power, so say in $1 million account, I'm going to use a third of it, that's 330,000 for these. I know that these cost, this is because it's a small, this is actually an empty account. This is going to be around $11,000 to $12,000 in buying power. And I'm going to get around $3,800, between $3,000 and $4,000. So what I know is if I have $330,000 in buying power, they're going to be $11,000 each. I can have 33 of them. I don't want to shoot my whole wad in one day. I want to spread it out because we know that the market, it doesn't just move straight up or straight down. If you look at the day chart again, let's look at the day chart. You can see that it moves. It moves in groupings, right? So we know that this is it's gonna go up, 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 and when it comes down, although this one's a little bit abnormal, normally it comes down slower. Here it's coming down slowly, which again, we love this trend. If I've been selling, I think 5 or 10 every day, and I'll keep doing that in our larger fund, and I'll keep doing that as we go down. But I will stop at 33% buying power. So you gotta be disciplined in what you're doing here. So let's go back to the trades, and so. Very straightforward, just review and send it. Okay, now, Rob, people say, what happens if we have a black swan and let's say it goes down 2,000 tomorrow and you're already in on Monday, you're already in the market. Over the weekend, it goes down 2,000. Okay, a couple things I can do. The first and easiest thing I can do is I can just go in here, and what I'll do is I will buy a put just as protection. So now you notice that my buying power to do this with 15,000, I put this on, all of a sudden, now this whole transaction, I'm only in for 458. So my buying power is released, and this cost me $90. Again, it's a little bit disingenuous. It actually cost me $189. But I don't want to do this at this particular time because I don't need that protection for all 54 days because I don't believe that the market will continue to go down. It might. It certainly might. But I don't think that that's typical. And again, if we look at it when on the down days, you can see it's not going to go down. It hasn't gone down 50 days in a row. You can keep going back. It just doesn't do that. It might, and if it does, that's fine, and we'll show you what to do. But let's suppose that the way I trade this is I'm going to go ahead and say, all right, we had the down move. I'm going to go ahead and do a long put, and I'm going to do this. What did we buy it at? Around, I forget the number. What was the one what was it we were buying this at? We were buying 12 delta, so we were buying it at 22,250. Okay, so I'm going to go to 22,250, and I'm going to be buying a 10-day. Let's say it goes down on Monday, 2,000 points. I'm going to buy the 22,250, and here it is right here, and I'm just going to buy that as protection, and that way. Now I've got a 2250 that's out 54 days, and I got a 2250 that's out 10 days. This 10 days in protection is going to cost me $300. It's going to give me all that buying power back. And so now if the market's going down, what happens is, although this one goes up in price, this one, although the cost to buy back, the short goes up, the long is producing just the same amount of money, and it's covering us. So it stops your loss immediately. Now, granted, it's only 10 days protection, but what happens if it continued down market? It keeps going down and down and down, or it just goes down and stays flat, and I'm in a bad way. It hasn't gone down yet to 22,500, but it's gone down a lot, and that because that would be almost 3,000. So I'll just buy another 10 days. That's what I'll do. I'll just keep renting buying power, and I'll keep putting on protection every 10 days or so. If I go in the money, I will probably roll it down and out. You need to, there's lots of videos on doing it down and out. I'll do a down and out video. I don't want to get too long into it. Now, what does Maria do? Maria does a little differently. So what Maria's doing is, remember, she's going to go in at 18 delta and much shorter. So she went in, let's say, at 21 days, and she went in at 18 delta. So at 21 days, so she went in here today, and let's suppose that the market starts going down against her. She can take this and just roll it down and out, or she can also just buy a put and cover back on the back side. And that's what she typically does. When she sees the market moving a lot against her because she's got such a high delta and is closer to in the money, that's when she does it. Normally, we wait till we're within $500 or 500 points of being in the money. So right now we're at 25,083. So if I had any 24,750s or even 24,500s, I would probably be putting on some protection. Maria she's a little more conservative when it comes to protection because she's more aggressive going in, and so she might put them on at 750 away, or she might just start selling some longs. I know she was selling some hedges this morning. I've seen them, or buying some hedges this morning. So that's what she's doing. But the idea is, I want you to think the main point is, on down days are okay. Down days are okay. There's a great opportunity. Stocks are on sale today, right? So let's try and very carefully execute a plan. And by the way, you should have this plan not just on down days. You should be thinking about it all the time. That's why we always manage our buying power and keep it under 33%, because we know that every couple of months, or maybe every month, we're going to get some beautiful down days. And the bigger the down days, the better, because volatility goes up. And so when we go to sell our premium, we even get more money for these. It's great. So I just want you to remember, down days are good. I'm Rob. That's Maria. We've been trading 1,000 straight days, and I hope you have a great trading day. Now let's see if I can figure out how to turn this off. Oh yeah, and for payment, if you could just tell us the types of videos that you want in the comments, we'd really appreciate it. Thanks a lot. Have a great trading day.